The props down at the South Bay. Let's start in Morgan Hill, North 101 to Cochran Road. Two-car accident, center divider. Slow back from Tenet, North 101 Coyote Creek. Getting word of some people in a narrow center divider changing a tire. That's northbound 101 at Coyote Creek. Northbound 101 at Lawrence. Two-car crash into two left lanes. It's got things pretty thick back from Brokaw Road. Fall into a hiring spree with Indeed. Their end-to-end hiring solution makes it easy to attract, interview, and hire candidates. Sponsor a job and instantly receive a short list of quality candidates whose resumes on Indeed match your job description. Visit Indeed.com/credit. With the Bay Area's best traffic, Larry Olson, Bloomberg 960 and 103.7 FM HD2 Jump.
All right, thanks, Larry. Yeah, let's get the 3-day weather forecast in the Weather Center this morning, where we find Gary Best. Gary, good morning.
All right, thank you, John, and good morning to you. We've got ourselves a pretty nice day out there with mostly sunny skies. It'll be breezy during this afternoon right along the coast, and temperatures will be up near 60 for the Bay Area, 70 further inland. Tonight mainly clear, down between 40 degrees across the North Bay and 50 elsewhere. And it's sunny, and looks like a little bit warmer tomorrow, 65 to near 70 by the Bay and 70 to 75 inland. Tonight clear in the 40s, and mostly sunny skies for Friday as well. And temperature mainly sitting in the 60s. Looks like fair weather will continue on into the weekend. This is Gary Best from Bloomberg 960 and 103.7 FM HD2. John?
Thanks a lot, Gary. Right now, we have 50 degrees clear skies in San Francisco. The California regulators propose PG&E pay over $155 million in fines and take other corrective measures for violations related to a deadly 2020 wildfire. The Zog fire started when a tree fell onto PG&E power lines in the Sierra Nevada mountains. It burned 56,000 acres, caused 4 deaths, 1 injury, and destroyed 204 structures. Right now, 50 clear. You're listening to Bloomberg. Just ahead, a check of the markets. Wow. Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we got a lot of tech earnings to parse through, and we actually have an IPO in the tech space. So let's get some smart minds together. Let's roundtable this thing. Bloomberg Intelligence analyst Anurag Rana and Mandeep Singh. Mandeep's in our studio. Anurag's phoning in from God knows where. But we're going to really go deep into tech on our next segment because that is clearly impacting the market. But first, let's go to John Tucker and get a Bloomberg Business Flash. John.
All right, and we're looking at the Fed. Could it take a cue from the Great White North? Paul, the Bank of Canada this morning dialing back the pace of rate hikes amid recession fears. Now there's some speculation the central bank of the U.S. may now be thinking about the same. The other narrative for traders, tech earnings, of course, they disappointed. The major averages have now turned mixed. The S&P 500 down just 6 points. Dow Jones Industrial Average, that's up by 158 points. That's a rise of 0.5%. The tech-heavy NASDAQ 100, remember, we were down about 2% earlier. Right now, down 1.25%, down 143 points. Morgan Stanley's Mike Wilson says stocks can still get a lift. What he maintains right now is still a bear market.
We're still bearish in the intermediate term. We don't think the bear market's over, but we do think this tactical rally is going to be big enough to try and pivot and trade it. You know, for those clients, you can do that.
But he also told Bloomberg this morning he thinks ultimately the bear market in stocks will be over probably sometime in the first quarter. Right now, again, S&P 500 down just 5 points. As for yields, the 2-year yield right now 4.43. That is down 2 basis points. The benchmark, the 10-year yield, 7 basis points lower. That is at 4.02%. And we check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash Poll.
All right, John Tucker, we appreciate that. We're doing some big-time discussion here about Bloomberg policy here. the food is going, the lunches are going away Friday.
Unbelievable.
Unbelievable. We need to talk to somebody about that. I don't know if we know anybody.
Hopefully they're listening.
Yes, let's do some tech talk here because there's a lot of earnings coming out of Silicon Valley. We got the Bloomberg Intelligence technology team with us, Mandeep Singh here in Bloomberg Interactive Broker Studio. Anurag Rana phoning in from God knows where. But Anurag, let's start with you. I get it that digital ad spending slowing. We'll go over that with Mandeep. But Microsoft, a little bit weaker in their guidance than I would have anticipated. I think the street as well, judging by the stock. What did you take away?
No, I also thought that the guidance was a bit weaker than what we had anticipated. We were looking for a slowdown somewhere from 16% constant currency growth rate to let's say around 10 to 12%, and these guys said they were going to be somewhere around 8 or 9. That was a bit of a surprise to us. Now with this, in our view, tells that enterprise spending is starting to hold back. Now this does not mean this is not a good sign for all enterprise companies, both in the software world and the services world.
And so, Mandeep, let's also tie in what we heard from Alphabet. If I look at the shares right now, I see them down about 7%. They've clawed back a lot of their losses, but still 7% loss on the day. What was the biggest headline there to explain this market reaction?
I mean, across the board, they validated the weakness on the ad side, but we heard from Snapchat, Alphabet said search ad revenue growth is slowing, YouTube is slowing, and look, I mean, except for search, none of their other segments make any money. So if you're an investor in this stock and you're looking at this, management saying search is slowing, but we are growing our employee headcount by 25%, you're questioning, what is it that they're hiring all these people for? And when will that translate into profits? And I think that is what they need to address.
So, Anurag, there's no reason for anybody to think that big tech spending is anything but a short-term cyclical pullback right here. Because, this is the only reason we talk to people like you and Mandeep is because your businesses that you cover continue to grow all the time. That's still the case, right?
Yeah, definitely. I'll give you a very easy example. Cloud is something that everybody's talking about today, slowdown in that. If you go back and look at during the pandemic, we saw a similar slowdown for 4 quarters in a row. And then the year after, growth rates improved, which is very unusual for these large businesses. And we expect a similar trend here. The end markets are so large, we are still in very, very early innings in this case. So even if we see slowdowns in the next 2 to 3 quarters, we expect a massive bounce back in the year after that.
And
that's a true tech analyst right there.
A massive
bounce back.
Yeah.
It's not just Dan Ives. All these tech analysts, massive bounce back.
They can see the future.
They can, I know.
Yeah, and it involves technology. It makes sense to me. But, Mandeep, I want to go back to the social media names because we still have 2 biggies left. We got Twitter, we got Meta, both interesting for their own reasons. But given what we saw from Snap, like you mentioned, given what we saw from Alphabet most recently, are we just going to be talking about ad spending? Is it going to be another gloomy 2 reports to sit through?
I think so, but look, to Anurag's point, there is a cyclical element even in ads. Things will come back, the growth rates will improve. The problem for Meta specifically is, there is a question mark around how sustainable their business model is, given what has transpired with Apple's privacy changes and, TikTok taking shares. So they have a real challenge ahead of them. I'm not worried about search. Search will come back. YouTube growth rates will be 25-30% after this downturn. So there is a lot of cyclical element within ads, but then I think the key to watch out for is what happens to Meta.
All right. We actually had an IPO today, which is a rarity in 2022. Mobileye IPO'd at $21 per share, giving it it's an $860 million IPO. Bloomberg News is reporting that the Mobileye has not traded yet, but it's indicated to open at 25. Mandeep, what is Mobileye and what's the street call on this company?
Well, Mobileye is one of the segments within Intel, a company that they bought, and it focuses predominantly around autonomous driving. They make chips and they have embedded software for driving, level 2, 3, 4 autonomous driving. So very hot space given what we have seen from Tesla this year, and it made sense that Intel went ahead and, IPO'd this company. The valuation allocation clearly, I think, was pulled back from the initial discussions, and I think it was priced well enough that, there was receptivity around investors looking to get that initial tranche of the allocation. But look, I think it's still small when it comes to the capital raise here. $800 million isn't going to make a difference in Intel's fortunes. And I think what Intel wants to do is really to showcase,